Datavault AI, trading under the ticker DVLT on the NASDAQ, is currently priced at 0.85 USD, showing a decline of 0.032 or 3.63% during today's trading session. While a drop of over 3% might seem like a standard fluctuation in the volatile world of microcap tech, there's a much deeper story playing out beneath the surface of this valuation that most retail traders are completely missing. Most people look at a sub-$1 stock and assume it is either a lottery ticket or a dying entity. But the reality is that Datavault AI is currently caught in a massive liquidity trap that has more to do with institutional positioning than the actual health of its underlying technology. While the broader market focuses on the massive gain seen in Nvidia stock or the steady climb of Apple stock, smaller players in the artificial intelligence infrastructure space are being squeezed by a lack of volume and a shift in how capital flows through platforms like Interactive Brokers and Fidelity. The expectation among many small-cap investors was that the rising tide of AI would lift all boats, yet the reality we are seeing today with Datavault is a stark contrast, where the market is ruthlessly punishing any firm that doesn't show immediate massive scale. The current price action at 0.85 USD reflects a significant psychological battleground. For those using a Fidelity mobile app or checking their positions on the Robinhood app, seeing a red day like this can be discouraging, but the volume data tells a more nuanced tale. We are seeing a high concentration of sell orders coming from smaller individual brokerage accounts, likely triggered by stop-loss orders as the price dipped below the 0.90 mark. Meanwhile, the order flow on the Interactive Brokers platform shows that larger, more patient participants are not necessarily dumping shares in a panic. Instead, they are letting the price drift lower to find a more sustainable floor. This is a classic example of the tension between short-term expectation and long-term reality. The expectation was that Datavault would ride the coattails of the larger tech giants, but the reality is that the market is currently in a show-me phase, where speculative promises are being discounted heavily. If you are managing your own funds through Schwab Intelligent Portfolios or using various investing sites to track your performance, you know that the macro environment for tech is shifting. We are no longer in a period where just mentioning AI is enough to sustain a valuation. The 3.63% drop today is a reflection of the market demanding more than just potential. It wants to see how these smaller firms can survive in an environment where the cost of capital remains high. When you look at your SoFi active investing dashboard, you have to ask yourself if this dip is a structural failure or a temporary liquidity crunch. In the case of Datavault, the trading volume today has been relatively thin compared to its 30-day average, which suggests that this downward move is being driven by a lack of buyers rather than a massive exodus of informed sellers. This is a critical distinction that separates professional traders from those just starting out with online investment. For anyone holding a position in their Fidelity brokerage or individual brokerage, the movement of DVLT today highlights the importance of understanding sector momentum. While the big names like Tesla stock and Nvidia stock often dictate the mood of the NASDAQ, the microcap tier follows a different set of rules. We are seeing a rotation out of speculative AI plays and into more established cash flow positive businesses. This shift is visible across the Robinhood investment spectrum, where fractional shares and retail-heavy stocks are feeling the heat. Datavault AI, by virtue of its current price point, is extremely sensitive to these shifts in sentiment. The expectation was that the company's recent announcements regarding data security and machine learning would provide a solid cushion, but the reality is that in a high-interest rate world, investors are less willing to wait for a payoff that might be several quarters away. Taking a step back, what does Datavault AI actually do? At its core, the company focuses on the intersection of data management and artificial intelligence, providing tools that help organizations secure and manage the massive amounts of data required to train modern models. Think of it as the plumbing for the AI world. While the headlines are stolen by the companies building the actual models, firms like Datavault are trying to solve the problem of how that data is stored, verified, and protected. Their business model relies on a mix of licensing and service contracts, which in theory should provide steady revenue. However, the struggle has been in the execution and the speed of adoption. Smaller companies often face a chicken and egg problem, where they need large contracts to prove their worth, but large clients are hesitant to sign on with a company whose stock is trading under $1. This creates the exact kind of tension we are seeing in the price action today. When you look at the Fidelity trading platform or use Interactive Brokers trading tools, you can see the historical volatility that has defined this stock. It has a history of sharp spikes followed by long periods of consolidation or slow decay. This is why many people who use a SoFi robo-advisor or other automated tools might find their portfolios avoiding these types of stocks in favor of Fidelity ETFs or Fidelity mutual funds. Those more conservative investment choices provide stability, but they don't offer the high reward potential that draws people to self-investing in names like DVLT. The reality of investing in this tier of the market is that you are often betting on a single contract or a single partnership to change the entire trajectory of the firm. Looking at the broader market, the way people engage with stocks has changed. Whether it is through Robinhood Crypto, Robinhood Cash Management, or a traditional Fidelity Wealth Management account, the speed of information is faster than ever. This means that a 3.63% drop is broadcast instantly to thousands of traders, often leading to a feedback loop of selling. In the case of Datavault, we need to look at what could actually change the narrative. What are the catalysts? If they can land a partnership with a major player, someone in the orbit of Nvidia stock or Apple stock, the valuation could change overnight. But until that happens, the reality is that they're fighting for relevance in a crowded space. I want to hear from you on this. Comment below how many shares of Datavault AI you currently hold and what your average cost basis is. It is always interesting to see how the retail community is positioned in these smaller tech names, especially when the price action is as volatile as what we are seeing today. From a macroeconomic perspective, the pressure on the tech sector is real. While platforms like SoFi Invest and various investing sites provide great access to the markets, they also expose investors to the brutal reality of market cycles. Datavault AI is currently caught in a cycle where the market is favoring quality over growth. This is why you see Fidelity IRAs and other long-term accounts shifting towards value, even in the tech space. The expectation that AI would be a permanent bull market is being challenged by the reality of earnings and execution. Datavault needs to show that it can not only build technology, but sell it profitably. Their past performance shows a company that is capable of innovation, but has struggled to translate that into consistent shareholder value. For those using the Robinhood trading platform or Interactive Brokers platform, the technical setup for DVLT is now looking quite precarious. Falling below 0.90 puts the next major support level much lower, potentially near the 0.75 mark if the current selling pressure doesn't abate. This is where self-investing becomes difficult. It requires the discipline to look past the red numbers on your screen and evaluate the company's fundamentals. Is the data vaulting technology actually superior to what the big tech firms are building in-house? If the answer is yes, then this 0.85 price point might be a massive disconnect between price and value. If the answer is no, then the market is simply doing its job of pricing in a declining asset. When we consider the future outlook, we have to look at several possible scenarios. In the most optimistic view, Datavault secures a series of enterprise contracts that prove their model can scale, leading to a rapid re-rating of the stock. In this scenario, those who bought at these levels through their individual brokerage or SoFi trading platform would see significant gains. The pessimistic view is that the company continues to burn through cash, while the larger players in the industry consolidate their lead, eventually leaving Datavault with a shrinking market share and a need for further dilution to stay afloat. This is the risk inherent in any online investing strategy that targets microcaps. The reality of the situation is that Datavault AI is a high-risk, high-reward play that is currently being weighed down by market sentiment and a lack of clear near-term catalysts.
The expectation of a quick recovery is being tempered by the reality of the daily price action. Whether you are using Fidelity investments for your long-term goals or interactive brokers' fees are a consideration for your high-frequency trading, the lesson here is the same. Price is what you pay, but value is what you get. Right now, the market is unsure of the value, which is why we are seeing this 3.63% decline to 0.85 USD. To wrap things up, the story of Datavault AI today is a classic struggle between the hype of a new technology and the cold reality of a demanding market. We started with a price of 0.85, reflecting a significant intraday drop that has caught many off guard. While the expectation was for the AI sector to provide a safety net, the reality is that the market is becoming much more selective. We've looked at the liquidity traps, the institutional positioning, and the fundamental challenges the company faces in